guys, it's Stock Curry, and the markets were up massively today. Is this a bull trap, or is this the bottom and we're going to start going back up? I'm going to talk about the reasons why the market might go up, the reasons why it might go down, and I also have an update for you on AMC. So let's get into it! Okay, the markets went up a lot more than anybody was expecting today. The Dow has now recovered all of its losses from last week in a single day. So what does this mean? Has the correction bottomed out? We're going to start going back up? Or do we have more downward pressure in the future? Well, believe it or not, the technicals are completely neutral right now, and nobody knows. Some people think the market's going to go up, some people think the market's going to go down, and everybody has valid reasons for their thinking. So what I want to do is let you know all of the reasons why the market might go up and all the reasons why the market might go down. Now, I will let you know that on the Dow and S&P, they are bearish on the candles, neutral on the RSI, and bullish on the MACD. The NASDAQ is the lone outlier where it is actually bearish on the candles, bearish on the MACD, and neutral on the RSI. And so for the Dow and S&P, they literally could go either way. There is no technical indication as to which way they're going to go whatsoever. The NASDAQ is the only one that is still trending downward. So here are all the reasons why the stock market might go up over the next few weeks. First of all, we have the Omicron, which has turned out to be a lot less of a deal than a lot of people have thought it was going to be. It turns out that a lot of the symptoms are very mild, and even though it is highly contagious, the symptoms are very mild, it's really nothing to be concerned about. A lot of people are comparing it to the common cold. And so that's one reason why the stock market might go up. In addition to that, we do have the debt limit bill that's coming up in the next 2 weeks. If that all gets resolved a lot faster than people are thinking, we could see the stock market go up. On Friday, we have inflation numbers coming out. If those are much lower than expected and they show that inflation is really slowing down, that could also cause the market to go up. And next week, the Fed is having their meeting. They are widely expected to wrap up their tapering come February and then start raising interest rates somewhere between March and June of next year. Now, if anything changes on that and the Fed comes out and says that they are going to delay raising of interest rates until a little longer, or that they were just talking about wrapping up their tapering by February, but they're actually going to wrap it up in June, if anything like that happens, that could also cause the market to go up. So we have a lot of fundamental things that could cause the markets to go up. Now, there are also a lot of things that could cause the market to go down. And basically, they're all the exact opposite of the things that could cause the market to go up. So if the Omicron comes out and it says, yeah, people do have minor symptoms, but those are the people that were vaccinated, and people that are not vaccinated are actually getting sent to the hospital. And further, because it's so contagious, it's overwhelming your hospital system, that could cause the markets to go down. Further, when it comes to inflation numbers that are coming out on Friday, if those inflation numbers come out much higher than expected, that could also cause the markets to go down. And then the Fed meeting next week, if they come out and they say, you know what, we're actually going to wrap up tapering even faster than February because inflation numbers were so high, and we're going to start raising interest rates a lot sooner than June because inflation is so high, that could cause the markets to go down. And if the Democrats and Republicans can't come up with some sort of agreement and get a debt limit bill passed in the next 2 weeks, that could also cause the markets to go down. And so we have a lot of news. We have no idea how this news is going to play out, no idea which way it's going to go, but whatever happens, those four things are going to massively affect the stock market either up or down over the next 2 weeks. And so it's really a wait and see game at this point. Now, a lot of people think the market's going to go up. A lot of people think the market's going to go down. And there's people like me saying, I just don't know. I personally don't have a lot of faith in our politicians to get the debt limit bill resolved in the next 2 weeks without waiting until the very last second. So personally, I think that alone is going to help push the markets down. Now, I actually think the inflation numbers are going to be better than expected on Friday. And so overall for this week, I think we're probably going to see a green week. Today was a lot greener than anybody would have expected. I don't know what's going to happen Tuesday. We might get a little bit of a green day Tuesday, maybe a little bit of red on Wednesday and Thursday. And then if inflation numbers do in fact come out good on Friday, then we can see another green day on Friday. But I think it's really next week that we're going to see a lot of the red. So my guess is this week is going to be green, next week is going to be red. And that's what I think is going to happen. So we'll see. It's just a guess. I don't know. For those of you guys who are new to this channel, You haven't heard me say this before, but I've told my old subscribers this. I am an analyst, I am not Jesus. So I can give you my best prediction, but I don't know what's going to happen in the markets. Okay. Let's get into our stock picks because I do want to give you an update on AMC as well as other really popular stocks that I want to talk about. For those of you guys who are new to this channel, my name is Stock Curry. I used to work as an analyst for some large investment banks, and now I analyze stock picks on YouTube. Every day I spend hours and hours and hours watching YouTube videos, and then I consolidate all of the stock picks from the top YouTubers and I put them together into a single video. I give you both the cliff notes on their stock picks as well as my analysis on their stock picks. Now, if anything I talk about today piques your interest, make sure you listen to who they talked about their stock and then go watch their video to get the full details on what they said. Now, all I ask for putting all of this together for you guys is that you hit that like button, subscribe, and follow the page so that you can get notified when I release my next video. In fact, I'll give you 5 seconds to do that right now. Alright, before we get into our stock and crypto picks, I do want to remind you that I am not a financial advisor. Nothing I talk about today is a recommendation to buy, sell, or hold. These are just my opinions which may or may not be accurate. Please do your own research before investing in any asset. If you're wondering what you're looking at right now, this is the Webull desktop app. Webull is the app that I use for my trading, and it is also the app that I use in all of my videos. If you'd like to get 2 free stocks worth up to $2,300, you can sign up for Webull using my link in the description below. When you sign up for Webull using my link in the description below and deposit just $1, Webull is going to send you 2 free stocks worth up to $2,300. All right, let's get into today's stock and crypto picks. And first up is SHIB. This is Shiba Inu. Keen and Grace let us know that Shiba Inu just signed the contract to have the game developer build the Shiba Inu metaverse game. That is causing some upward pressure on the coin price in the short term. Just keep in mind that it will be at least a year before any game is launched, so this is really a long-term catalyst. And next up is AMC. This is AMC Movie Theaters. AMC is holding support at the 300-day EMA. Keen & Gray said $25 looks like a load-up zone from a technical standpoint. That could be true, but there is risk here. While AMC is holding the 300-day EMA for now, the MACD continues to fall, and the candles are making lower highs each day. That is actually quite bearish. AMC is forming a technical pattern called a descending triangle. On a descending triangle, AMC would continue to bounce off of the $27 support level for a few days until lower and lower highs get closer and closer to $27. Once the high for the day reaches or gets very close to $27, technically, AMC would break below $27 and continue falling. Now, I'm not saying that's what's going to happen. I'm just saying that technically that's how it looks right now. If AMC is able to hold the 300-day EMA through next week, I do believe it will bounce and continue higher. But if AMC breaks below the 300-day EMA, there are no technical support levels until we get down to $15. So be careful and only invest money that you can afford to lose. Now, fundamentally, Keen & Grace let us know that the CEO of AMC, Adam Aron, is offering an NFT to all shareholders who are members of AMC Investor Connect. It looks like the NFT will be released at some point early next year. That might cause some media coverage as people start showing off their NFTs in January. And corresponding with that, keep in mind that a lot of the stocks that are falling right now should start rebounding in January once all of the tax harvesting is completed. So that could be another upward catalyst for AMC come January. Now taking a look at the short squeeze potential, we can see how AMC was dropping in utilization last month, but this month utilization has started to rise back up, as represented on the orange line on this chart. It is now at 76% and the short interest is up to 17.44%. So it looks like shorts are starting to believe AMC might continue falling, but keep in mind that 25% of short sellers still think AMC will rise back up from here. Further, as you can see on the blue line on the chart, the average age shorts have held continues to rise. That means most of the shorts who covered had purchased fairly recently, and the shorts who were holding AMC back when it was trading at $10 are still holding. Basically, they are bag holding their short positions that they are down 180% on. That's quite a reported loss for the year. And in the same way stocks that have fallen will be victim of tax loss harvesting with people selling them, stocks that are heavily shorted that have run up massively, like AMC, will be benefactors of tax loss harvesting as hedge funds close their short positions for losses in order to offset their gains in other stocks. That could cause an upward pressure on the share price of AMC. But I have a feeling that any hedge funds that plan to tax loss harvest their AMC short position losses are going to wait until the last week of December to do so. So we might not see a bump in the price of AMC until the last week of December. Next up is DKNG. This is DraftKings, and they're an online sports betting company. Chris Sain said DKNG will double in price over the next 3 to 6 months. So it looks like Chris Sain has a $60 6-month price target on DKNG. I think that's possible, but for now, I'd limit my price target to $45 just based upon the technicals. That's still a 50% gain. Now in the short term, DKNG remains a falling knife. It is oversold on the RSI, but then again, it's been oversold for a month now. So we're still waiting to see how low DKNG will fall before bottoming out. We still did not have any confirmation at all of a rebound. Now, I was able to go all the way back to May of 2020, and I found a support level for DKNG at the current price. So there is at least one technical indicator pointing to the possibility of DKNG bottoming out here. If it fails to bounce off of this support level, the next support level is all the way down to $18.85. Now, it's hard to say how low DKNG will go. Fundamentally, DKNG has a price to sales ratio of 15. Keep in mind that a price to sales ratio of 4 is considered fair value, and a price to sales ratio of 1 is considered a value stock. That said, growth stocks will often trade in a price to sales ratio of between 10 and 20. So DKNG is currently fair valued for a growth stock and overvalued considering all stocks in general. So again, it's hard to say if DKNG will continue falling or not, but there are at least some indicators that this might be the bottom. And next up is FSR. This is Fisker, and they're an EV manufacturer that went bankrupt in 2013, but has now been restarted. Their first EV, the Fisker Ocean, is an all-electric SUV that will start delivering towards the end of next year. Larry Jones opened a position on FSR on Monday. He recognized that FSR could continue to fall, but he thinks it is currently in a buy zone. Now technically, FSR continues to fall, and it is showing no signs of bottoming out anytime soon. We don't have a lot of history on FSR, so it's hard to tell where it will bottom out, but the $13 or $14 level has recently been a level of support for FSR. Keep in mind that FSR is a pre-revenue company, so we can't do any fundamental analysis on the stock. This is purely a speculative play at this point, and therefore everyone's going to have a different viewpoint as to what the fair value is. So you'll just have to make your own determination if you think FSR is undervalued, fair valued, or overvalued at this point. And next up is GS. This is Goldman Sachs. Larry Jones said he bought more GS on Monday at $385. Larry chose GS over other banking stocks because GS has one of the lowest PE ratios. Like Stockmo and myself, Larry Jones thinks banking stocks will do well as the Fed starts to raise interest rates next year. And next up is LCID. This is Lucid Group, and they're an American EV manufacturer. Stockmo and ZipTrader let us know that LCID was just hit with a subpoena from the SEC regarding the SPAC deal. LCID initially dropped 20% on Monday, but then recovered most of those losses to close down only 5%. ZipTrader doesn't think the subpoena is purely based on anything LCID did wrong, but rather that they are just getting caught up in sweeping investigations by the SEC. Today, Digital World Acquisition Corp also announced that they are under investigation by the SEC for allegations that they were in talks to take Donald Trump's social media company public before the SPAC was actually formed. If true, that would be illegal because SPACs are not supposed to have a merger target before they are formed. And of course, SEC investigations aren't just limited to SPACs. Tesla announced today that they are being investigated by the SEC also. Just keep in mind that not all SEC investigations result in charges, and most of the time when charges are brought, the company will just pay a relatively small amount without admitting any wrongdoing. So while this does cause some short-term FUD for stocks like LCID, DWAC, and TSLA, once these investigations are over, they could present some buying opportunities. And next up is NVDA. This is NVIDIA. Invest with Henry discussed how to make money with bullish bear spreads, and he used NVDA as an example. Henry thinks NVDA will drop in price, and I agree. Now, if we head over to the December 17th options and we take a look at the puts, you can see how the $297.50 put is currently selling for $11. Now, taking a look at the graph, you can see how this put option will cost you $1,100 and your break-even price is $286.50. Now, let's see what happens when we buy a put spread instead of a straight put. I'm going to switch the option strategy to vertical, and then we're going to take a look at the $297.50/$300 put spread. Now, with this put spread, you're only paying $110 and your break-even price is $298.90. So you're only paying 1/10 of what you would have to pay by buying a single put option. Further, your break-even at $298.90 is $12.40 closer to the money than the single put was. Now, the difference is in your max profit. With a put spread, your max profit's $140. So you're risking $110 to make $140. With a straight put, your max profit is nearly infinite. But when the profit potential is higher, the odds of making a profit are lower. When the profit potential is lower, the odds of making a profit are higher. That's how risk works with options. It's kind of like going to a casino and betting on roulette. If you bet on, say, black or red, the odds of you actually making money and winning that bet are a little less than 1 in 2, and you'll double your money on that bet. On the other hand, if you bet on a single number, now your odds of making money are only 1 in 38, but when you hit, you're going to make a lot more money on your bets. And the same way works in the options market. When you have a very low chance of actually making money, you can make a lot more money, such as buying a single put. When you have a much higher chance of making money, the amount of money you can make is capped, such as buying this put spread. So if you were just to buy a single put, NVDA needs to drop 4.6% over the next 2 weeks in order for you to make money. But with this put spread, NVDA only needs to drop 0.5% for you to make money. So what do you think is more likely? NVDA dropping 4.6% or NVDA dropping 0.5%? Obviously, the 0.5% drop is far more likely than a 4.6% drop. Further, with the spread, you only have to invest $110 to buy the spread, but with a single option, you have to invest $1,100. So not only is the spread far more likely to generate a profit, it is also far less expensive to buy. Now, you could also sell a credit call spread. Just so you know, selling a credit call spread and buying a put spread are the same thing. They both have the same or very close to the same break-even price. So when you're considering this strategy, always check the credit call spread also to see which one would be a better way to go. In this case, selling the $297.50/$300 credit call spread, if I change the contracts to 1, it will cost you $118 for a maximum profit of $132. By buying the bear put spread, you're only going to pay $110 for a max profit of $140. So in this particular case, buying the put spread is a little bit better than selling the credit call spread. And last up is TSLA. They're an American EV manufacturer. Larry Jones said he bought more TSLA on Monday. Larry Jones said that whenever TSLA drops below $1,000, he buys it. Larry Jones got a fill price of $973. Now, Larry bought TSLA for a long-term hold. This is not a short-term play. Now, technically, TSLA is bearish on the technicals, but it is showing some signs of bottoming out here at the 50-day EMA. There is no confirmation of that, though. This might just be a slight pause before TSLA continues to fall. I will tell you that historically, TSLA tends to bounce off of this blue upward trend line that I drew. So I would not be surprised to see TSLA fall all the way down to $820 before bottoming out and start going back up again. Alright, I hope you enjoyed this video and got a lot out of it. Comment down below what you think the market's going to do over the next 2 weeks. And if you're looking for some day-to-day help and some immediate answers to your questions, I do want to recommend the Lucrum Investing Discord. They have over 60 analysts just like myself who are there for you 24 hours a day to answer your questions, help you with your trades, and give you some incredible trade ideas. Every single week they're making money over there. They're constantly having gains of 100 to 400% on certain plays. place. So go check them out. I have a 7-day free trial to Lucrum Investing down in the description of this video. Just go to scottcurry.me/discord to get your 7-day free trial. If you like it, you can stick around. If you don't like it, no hard feelings. Also, if you're looking for a broker to trade with, you can sign up for Webull using my link in the description below. When you sign up for Webull using my link in the description below and deposit just $1, Webull's going to send you 2 free stocks worth up to $2,300. And when you make any cryptocurrency trade, even if it's just $5, Webull's going to send you $5 in free crypto. Also, if you're not a US resident, or if you're looking to trade OTC penny stocks, or if you just don't like payment for order flow, then I recommend Interactive Brokers. Interactive Brokers is a great trading platform. They have highly discounted trading throughout the world. Trades start at just $1 US, $1 Canadian dollar, 4 euros, or 6 Australian dollars, depending upon where you live. And both Webull and Interactive Brokers both offer the full pre-market and after-hours trading from 4 a.m. until 8 p.m. Eastern Time. I do want to remind you that I have material connections with both of those, so whenever you sign up for either one, not only are you getting a great broker to trade with, you're also helping me to continue to produce these great videos for you. Now finally, I want to remind you to hit that like button, subscribe, and if you're on YouTube, go ahead and click the bell icon next to the subscribed button so that you can get notified when I release my next video. I hope you have a lot of success trading, and I will see you tomorrow.